Welcome to Explain the Charts, where we demystify market movements and provide actionable insights for traders and investors alike. Today, July 24th, 2025, our focus is squarely on XAUUSD, or gold, a commodity that finds itself at a fascinating crossroads of fundamental strength and recent technical weakness, sparking lively debate among market participants. Recent headlines paint a picture of caution for gold, with various sources, including FXStreet and Forex.com, reporting a decline in prices and questioning its immediate upward potential. This weakness is attributed to a growing risk appetite in broader markets, fueled by the promising prospects of a new U.S. trade deal, which typically diverts funds from safe havens like gold and towards riskier assets. News outlets suggest gold has slumped to near $3,360 and failed to break higher, breaking key support in some analyses, leading to short-term bearish sentiment. However, to fully grasp gold's trajectory and make informed decisions, we must look beyond the immediate headlines and consider the powerful underlying drivers that have been shaping its long-term trend. A significant explainer from the South China Morning Post highlights the massive role central banks are playing in gold's ascent, calling it a long-term structural shift in demand that cannot be ignored. Following Russia's 2022 invasion of Ukraine and subsequent freezing of Russian assets, central bank gold purchases surged fivefold as nations sought alternative reserve assets outside traditional fiat currencies. This sustained and substantial demand from governments, backed by reports from Goldman Sachs, is unequivocally expected to give gold prices an ongoing boost for the foreseeable future, acting as a strong fundamental tailwind. So, while short-term sentiment might be bearish due to trade deal optimism, the fundamental long-term bullish outlook for XAUUSD remains robust, driven by these strategic, institutional purchases, making any significant corrections potential buying opportunities. Now, let's transition from the macro narrative to the tangible reality presented on our charts, starting with the overarching daily view, which offers a broader perspective on gold's journey. Here on the one-day chart for XAUUSD, stretching from March 2024 to the present, the dominant theme is undeniably bullish, a trend that began much earlier but intensified significantly over the past year. This sustained upward trajectory, characterized by a consistent pattern of higher highs and higher lows, visually confirms the direct impact of that long-term central bank buying we just discussed, driving prices steadily upwards. Gold has not just climbed, it has surged impressively from the low $2100s, carving out a clear ascending channel that reflects steady, persistent accumulation by large players. We can observe significant milestones, with price easily surpassing the psychological $3,000 level and reaching new all-time highs well above that mark, demonstrating gold's growing importance in global reserves and investment portfolios. This consistent strength underscores gold's role as a resilient asset in times of economic shifts and geopolitical uncertainties, often acting as a hedge against inflation and market volatility, regardless of shorter-term market sentiment. Volume on these upward moves has generally been healthy, particularly on breakout days, supporting the validity and sustainability of this long-term trend, indicating strong participation. While some minor corrections have occurred, typical of any healthy market in an extended rally, they have consistently found strong support at previous resistance-turn-support levels before resuming the broader ascent, indicating robust underlying demand. Each time gold has pulled back, buyers have stepped in aggressively, often around previous swing highs that converted into new support, a classic technical sign of a robust uptrend and a bullish market structure. This longer-term perspective reinforces the idea that while daily fluctuations and pullbacks are normal, the overall direction remains firmly to the upside, largely due to the fundamental shift in central bank demand. Let's zoom in on the more immediate landscape within this larger uptrend, focusing on the daily candles from April 1st, 2025 to July 23rd, 2025. This period perfectly illustrates the failed breakout attempts and subsequent pullback that recent news reports have been highlighting, showing short-term price discovery in action. After a strong push to new highs around $3,349 in mid-April, gold saw a noticeable correction, finding a temporary floor near $3,256, which acted as initial strong support. A subsequent powerful rally in early May propelled gold significantly higher, briefly touching $3,434.17 before facing distinct resistance, possibly due to profit-taking or short-term counter-trend trading. Another peak was seen in mid-June at $3,446.30, followed by a slight dip, and then the most recent high on July 23 at $3,438.60, demonstrating a triple top formation or strong overhead resistance area. Crucially, the daily candle for July 23 shows a significant bearish engulfing pattern, closing substantially lower at $3,389.97 after hitting that high, directly supporting the news of gold slumping and failing to break higher above the $3,400 to $3,450 range. The volume on this recent bearish candle was quite high, indicating strong selling pressure and confirming conviction behind the pullback from resistance. This recent rejection at these elevated levels suggests that the $3,400 to $3,440 zone is indeed acting as a formidable resistance band in the short term, a level where sellers are actively defending. Looking at potential support, the news mentioned critical support near $3,342. On our chart, we see prior lows around $3,300 to $3,320 in June, which would be crucial if the current decline accelerates, as these levels historically held up buying interest. A significant underlying support level also exists around $3,200 to $3,240, observed during the April-May consolidation, representing a stronger floor for any deeper corrections and a potential bounce area if the current pullback deepens considerably. For bullish momentum to truly ignite and overcome this recent rejection, gold needs to decisively clear the $3,451 level, as noted in analyst commentary, a move that would signal strong conviction and a powerful continuation of the uptrend. The current price action represents a test of conviction for bulls. A strong bounce from current levels or established support would indicate continued underlying strength. To gain a granular perspective on this current pullback and assess immediate trading opportunities, let's transition to the 15-minute chart, covering the intense price action from July 22, midnight UTC, through to July 23, 23:57 Universal Time Coordinated. This close-up view vividly displays the intraday dynamics behind the daily candle's significant drop, offering crucial insights into short-term sentiment and potential entry/exit points for nimble traders. We can see that gold spent much of July 22 in a relatively tight consolidation band, oscillating primarily between $3,385 and $3,395, a range that suggests a temporary equilibrium between buyers and sellers. Late on July 22 and early on July 23, there was a clear attempt to break out of this range, marked by several strong bullish 15-minute candles with increased volume, pushing the price rapidly towards the day's high of $3,438.60. However, as we moved into the latter half of July 23, a dramatic reversal pattern emerged, with large bearish candles, some showing long upper wicks, quickly erasing the earlier gains, indicating intense selling pressure from the overhead resistance. The sharp decline from the peak was accompanied by sustained, elevated volume, confirming the conviction behind the sell-off and an inability to sustain higher levels, a classic sign of rejection. The current close at $3,389.97 on this time frame, directly within the earlier consolidation zone, suggests a return to a more neutral or even slightly bearish short-term bias, as momentum has clearly shifted downwards. For short-term traders, the immediate support to watch is the low established on July 23 at $3,382.20, A break below this point would strongly confirm continued weakness and potentially trigger stop losses. A breakdown below this level could trigger a quick flush towards $3,370 or even the $3,360 level cited in news headlines as a current struggle point, presenting clear shorting opportunities for intraday traders. Conversely, for a short-term bullish reversal, gold needs to reclaim and hold above $3,400, converting it from intraday resistance back into a potential launchpad for higher prices, ideally with increasing buying volume. Failure to hold the $33.80s range on this timeframe could indicate further downside pressure, while a consolidation here might suggest a base building for another attempt higher, indicating a tug-of-war between buyers and sellers. Monitoring the volume profiles during any future rallies or declines on this chart will be crucial in gauging the strength of the moves, with high volume validating price direction and low volume suggesting a lack of conviction. Look for bullish or bearish engulfing patterns, hammers, or shooting stars on this timeframe for early indications of reversal or continuation. Bringing it all together, what does this comprehensive analysis tell us about XAUUSD on July 24, 2025, and how should traders approach it? In the long term, the fundamental backdrop for gold remains undeniably strong, driven by the persistent, structural demand from global central banks hedging against geopolitical risks and currency depreciation. This robust institutional buying paints a very bullish picture for gold over the coming months and years, suggesting that any significant dips could be viewed as prime accumulation opportunities for long-term investors. For the short to medium term, gold is currently navigating a period of consolidation and pullback from recent highs, confirming a temporary struggle against key resistance around the $3,400 to $3,440 zone. Crucial support levels to monitor closely include the immediate intraday low of $3,382, followed by the significant news-referenced critical support at $3,342, which, if broken, signals a deeper dip. A deeper, more robust support zone sits around $3,300 to $3,320, which has proven resilient in past pullbacks and would be a strong area for potential rebound if the current decline accelerates. On the resistance front, the psychological $3,400 mark and the recent high around $3,438.60 are acting as immediate barriers that bulls must overcome with conviction. The ultimate resistance for a clear, sustained bullish breakout is the $3,451 level, explicitly mentioned as the key to potential bull momentum in analyst reports. For bullish traders, look for entry points on a strong bounce from the $3,382 to $3,360 support zone, or a decisive daily candle close and sustained hold above $3,400. A move above $3,451, especially if accompanied by strong volume, would highly reinforce the likelihood of a powerful bullish continuation towards new all-time highs, with a high 75% likelihood if central bank buying continues unabated and global instability rises. Conversely, for bearish traders, a sustained daily close below $3,360 could signal a deeper correction towards $3,342 or even $3,320, with about a 65% likelihood, particularly if market risk appetite remains strong due to positive economic data or reduced geopolitical tensions. Beyond price levels, always monitor the volume accompanying any significant moves. High volume on breakouts or breakdowns adds credibility to the move, while low volume suggests indecision. Keep an eye on broader market sentiment, central bank policy announcements, and any evolving geopolitical narratives, as these external factors will continue to influence gold's safe haven appeal and overall demand. Always ensure your trading strategy incorporates disciplined risk management, setting clear stop losses and profit targets, adapting to both macro trends and intraday volatility. That's our in-depth analysis for XAUUSD today on Explain the Charts. Don't forget to like, share, and subscribe to stay ahead of the markets and make informed trading decisions.